Pretty important.
4,451 points is the low for the year, and we held that level, so that's a positive for our market. But we know our market is being driven by macro factors at the moment, and it is all about Greece. The key risk event this week is that Greek austerity vote, and it does look like ahead of that big risk event, we are seeing buyers sidelines. In fact, if you have a look at volumes, 20% lower than the average for the year, so not a lot of volumes going through the market, and what trades did go through the market did have a negative bias. All sectors across the board lower, with the one exception of Telecom. We saw Telstra up by 0.4% after its losses last week, but altogether our market coming close to challenging that 10-month low. And in fact, if you have a look across the blue chips, we are seeing many of these blue chips now at multi-year lows. We're seeing 2-year lows for the likes of Leighton, Macquarie Group, and a 1-year low for the likes of Woodside Petroleum. So altogether we are seeing a very negative bias towards the market, and it's all about Greece.
Seeing that he wants to see more fear in the marketplace. He'd like to see more panic selling in order to complete the correction, if you like, so they can set that low and then start to look for some sort of a comeback. Is that an extreme sort of a view, or something you'd agree with?
It is dependent on what happens in terms of Greece. I guess the fear here is the contagion effect. James mentioned that we do see a lot of banks around the world holding Greek debt, and it's worries about that contagion which could fuel panic selling in the market. And that's why the Greek solution is so important. I mean, Greece is a very small country in the whole scheme of things. Its population just over 11 million, and in terms of Euro GDP, it's around about that 2% mark. So it is a risk of contagion that could possibly lead to panic selling. And if you have a look at contagion, if you have a look at the Bank of International Settlements, it gives you an idea of how much Greek debt is held. And if you have a look at Japanese banks, 500 million, Spanish banks about 600 million. If you go down to the US, about 1.8 billion, the UK 3.2 billion. And if you have a look at France, then it's about 19.8 billion, Germany just under 27 billion. But I guess leaving that aside, the bigger risk is seen as not those amounts that are held on bank books, but possibly credit derivatives, which are a lot harder to gauge. And if you have a look at a country just like the US, where it has about only $1.8 billion worth of Greek debt on its books, if you count the credit derivatives, then its exposure rises to something like $41 billion. And then if you have a look at Portugal, that's about $46 billion. And then if you go down to Ireland, that's more than $100 billion. And then Spain, $175 billion. So a lot of fears about these peripheral countries and the effect it has. And the whole idea about kicking the can down the road is waiting until, I guess, countries that are quite unstable at the moment, like Portugal, like Ireland, Spain, have a bit of time to be able to sort out what they're going to do. And what you're hoping for is an orderly default of Greek debt instead of a disorderly default, which could lead to panic selling.
Make of it, I suppose, this who would be potentially interested, if you like, in coming to the party in terms of funding this project? As Michael mentions, QR National have previously flagged an interest in it. Who are the sorts of parties? I mean, would we start getting other Chinese parties? Obviously, Sino is still sort of, picking up its ball and leaving the playground.
I mean, just to give you a bit of a background about this project, it's all about iron ore mining, and it's all about iron ore mining because iron ore mining isn't a very difficult thing to do. It's about digging dirt out of the ground, transporting it. So this industry is dominated by infrastructure. If you have a look in the Pilbara region, the big players that dominate, BHP, Billiton, Rio Tinto, Fortescue, control the infrastructure. So when you are looking at iron ore mines, it is all about the infrastructure, and that's why this Okoji project is so important. But it is a massive project. I mean, initial estimates were at $4.4 billion. That increased to $5.2 billion last year in November, and that's expected to increase once again at the end of the month when the bank feasibility study is due. We know that these large projects have been blowing up. Now, in comparison to that project size, if you have a look at Murchison Metals' market capitalisation, it's below $350 million. Now, this is a company worth less than $350 million, taking on a $5.2 billion or more valued project. Now, some of the funding is coming through Mitsubishi, which is a 50-50 joint venture. They are hoping to fund it through a 60-40 mix of debt to equity. But even then, Murchison Metal does face a funding shortfall, and there has been a funding cloud. And that's why last week, when that Dow Jones interview came out, that QR National could be interested in buying a 25% stake off Murchison Metals, it was such a positive for Murchison Metals. We saw the shares soaring by more than 20% because that removes some of the funding risk risk in the project. However, a key Cornerstone Foundation customer saying that they're going to delay their $2 billion project, Sinosteel, is a huge hit to the project. That means there's only 2 other customers. If you take out, Murchison Metals as its own customer, then the only other customer for this project is Jindaobi Metals. So a huge question mark over this project. Of course, they need investors for this project to go ahead, and that's why Murchison Metals is in a trading halt. The Chinese, time and time again, have expressed interest, but really for this project to go ahead, they need that bank feasibility study, they need the funding, and they also need secure supply agreements in place to ensure the viability of this infrastructure.